All right, what's up, YouTube? So as the semester winds down, I'm gonna definitely get more into leverage plays. So what we're seeing in the market, like I've been telling you guys, time and time and time again, is that people are going to stop paying attention to geopolitical risk, and they're going to start paying attention to earnings as earnings get underway. So let me go ahead and switch my screen back over, and we're definitely going to take a look at a couple plays here. So as you see, if you look at gold from a 1 year perspective, we know that gold is definitely overbought. And I kept telling people at 1300 or near 1300, gold will definitely be checked down. But a lot of these YouTube traders, they're definitely telling you to trade gold, but you have to trade gold on a downturn simply because gold is definitely going down. And you should never trust another person's stock picks simply because, when you have that stat that over 90% of traders lose money, that 90% might include the person that you do follow on YouTube. So a lot of people are following picks that are going down. We see gold getting checked down. Like I said, gold will get checked down once the market starts to take their eyes off of geopolitical risk. Now we're taking the eyes off geopolitical risk. Now we're more focused on earnings. So let me go ahead and take a look at what I'm making here so far. As you see, XIV market strength is back. As you see, I've made about 3,500 for the day, 86 for for the actual profit on the stock. But as you see, the stocks are going up, and I'm slowly getting out of a loss and turning it into a profit. So I will definitely hold on to the XIV. This is definitely measuring, market strength. And as you see, the market is almost rallying up to 200 points. So a lot of people, they really get confused because they want to follow, they're looking for that risk. They want that high risk, high reward scenario, and that typically is not going to happen if you're following, stocks that are, getting dead volume and things like that. So, like I said, don't trust anybody else's picks. So I was telling people, I even told people, I even tried to join Techwood Solutions. I told these guys, I said at 1300, gold will get checked down. Or if it gets closer to 1300, gold will get checked down. And a lot of people were saying, no, I was wrong. But as you see here, gold is definitely getting checked down. We see gold try to reach 1297 at pre-market or overnight, and we just see it. It got checked down, and the market strength is definitely coming back into the market. So what people should have been watching, they should have been watching the banks. I told you guys the banks were going to rally. We see that the bank stocks are up 3%. If you'd have bought it at $41, held it because this is definitely going to $50. It's going back to 50 again and held it, you would probably have over $50 plus profit. So, like I said, the banks are just getting started. We go to the XLF. Let's see what's going on there. Like I said, the banks are just getting started. We see it bounce off support. The next check down we have will be at the $25 level. Right now we're at $23. Like I said, I give you guys, the closest you can get to the bottom, and you really can't trust anybody's picks. Like I said, when we see Snapchat, let's check out. We see Snapchat is definitely going negative, so we cannot trust anybody else's picks. You'll like the video from yesterday. Techwood Solutions. As you see here, Snapchat is now turning negative, and as you see, he is definitely taking a loss wherever he bought. Right here, it's definitely taking a loss. So you might hear an excuse from him, or you might hear an excuse that say, he might go long term. But when you look at it long term, there's definitely some bad news that just came out today. So when we invest in stocks, we want to make sure that we're paying attention to all the news that comes out on our positions. So watch out for the excuses that the YouTubers do make when they start to invest in these stocks, simply because they really don't know how to invest. They're always short-term trading, and they're always looking for the high risk, high reward scenario. I want you guys to balance out your risk, and I want you to make money as the stock market goes up. So if you would have bought FANs, like I was stressing on Thursday, you would have been up about 3%. Or if you bought XLF, you would have been up about 1.5%. So the RSI is definitely showing us that the market is due for a bounce, and we see the market is bouncing, right? We see the market bounce off support, and we see, the market might fill a gap here, and we might see a breakout. So let's look at the XIV. We see 65 is now being achieved, guys. Now we have to fill this gap right here, 65 to 67. There is a gap to be filled right here. So the market might turn negative tomorrow, but we're waiting on a lot of earnings, and a lot of people are optimistic that earnings will be really good. So, like I said, the gaps will always be filled, whether it's a gap down or a gap up. Gaps will always be filled unless it's an Under Armour type of situation where it's going to keep gapping down, and the company is definitely going to keep losing money. As you see here, the company definitely gaps down, and it's definitely not a good investment for anybody unless you're shorting the stock. But the interest on shorting will definitely probably kill you if you held it for so long. If you're not throwing at least over $20,000 into shorting this stock, it's definitely killing you on the interest. So, like I said, we do homework. Homework will always let us know what's going on with the stocks. So, Under Armour, bad investment. Let's check out Nike. Nike, somewhat choppy chart. Kind of, there's not really much going on here. There's not much technicals going on here. But we see that, it has a gap to fill at 57. So we might see the gap be filled at 57 if, investors and traders are starting to get optimistic on Nike. But I really have to make this video because a lot of people, they really don't believe that, following the RSI or following these technicals can make you money short term or long term. But we want to make sure that we're finding out, when is the best position to get on some of these dip plays. We see Berkshire Hathaway definitely trying to skyrocket back up. This is, I bought shares at 167. I might buy more in my TD Ameritrade account, so that way you guys can actually see a live trade going on for the long term. And as we see, Cisco is definitely giving us a good bounce. We see oversold position here. Cisco is giving us a good bounce, so this might be a relief rally right here because a lot of people, they sold stocks into tax lead, and now we see that a stat that proves that after 2 weeks the Nasdaq runs up over 1%, the IMW runs up over 1% as well, and the S&P does turn positive. Also, not to forget, the Dow Jones Industrial Index is positive majority of the times in this month. So, with that being said, you must do your homework and understand the historical facts for a lot of these market indexes and a lot of these market or these individual stocks. I'm sorry, but we want to make sure that we're paying attention to every single stat and every single historical pattern that's going on in these stocks. So I had a friend, like I said, he wanted to buy, he was saying, okay, Berkshire Hathaway 177. I said, no, I'm gonna wait till it comes down below 170. You know why I said that? Let's see if I get a 20-year chart here. But a 20-year chart shows that the stock does go over overbought levels, and after overbought levels, it does get checked down. So it became overbought at 177. I was saying, okay, we might see a bottom here at 165, 166, but anywhere below 170, this is definitely where I want to be a buyer at, and I definitely want to buy more. So as we see here, we have a double bottom forming right here, and like I said, what happens with double bottom? I know it's not a perfect W here, but this might be a small breakout getting ready to happen. But we want to check out all the long-term plays on sell-offs. So if we get a huge sell-off on Netflix, we must know why the stock is selling off. And if we get a huge sell-off on Apple, we must know why the stock is selling off. We must analyze all the conference calls. We must analyze every single thing that's dealing with the stock, that's making investors, turn away from the stock and start to take profits. So a lot of these YouTubers, they tend to focus you guys on the stocks that they're playing because, if they can get you into the stocks that they're playing, that brings volume, and it also brings them a safety net. So if they wanted to get out whenever they wanted to, you guys give them an out because you trade the stocks that they're trading. And that's simply all it is. But if we go to these leverage ETFs, that is a good one, to actually play since the volume is actually there. A lot of people do trade these leverage ETFs, whether it's leverage or whether it's not leverage. These stocks are still traded and volume is still there. So leverage ETFs are definitely one to check out. I'm trying to show you guys what happens when you actually hold on to these leverage ETFs. So we're going to give that a while into JDST. Okay. So JDST, we see it up of almost 7.76%. And we know that it is a gold short, and we need to understand why gold is going down. We see the correlation to the dollar, and we see the correlation to the market. So, like I said, we must understand. So let's check out J and I have to remember there's one stock that is actually not trading because they're going under a reverse split, and a lot of people are starting to get scared because they can't really get their money out, and it was halted. So when we do trade these, or when we do look to invest on these ETFs, we want to pay attention to the news that do come out. We want to pay attention to the actual reverse splits or splits that do happen. And as we see here, the market volatility is definitely falling down. We can look at it from a 1-year chart. Let's see, market volatility is definitely falling down. We see 32 is the low, and now we're pitching back on that sideways trading range. And it looks to we look to go back to that $32 bottom. So if we go back to $32 bottom, we might look to jump into that and hold it for some kind of negative headwind that may happen here. But 32 is definitely the bottom. We see 32.9 is holding support, strong support. And usually when things, they try support once, twice, and then when they try the third time, that's usually when a breakdown happens. But hopefully, the market does get stronger and we will keep seeing gains, no matter what. But if we start to focus back on geopolitical risk, that's when the market will turn negative. But for right now, we're worried about earnings, and that's all the market needs to worry about. And let's see if we have any chats here. Maybe you guys want to throw out a suggestion, go ahead, let me know. I'll probably end this video short. I have to study right here, but like I said, when you're dealing with long-term perspectives on stocks, I would say buy any stock at any level, especially on a downturn. We see no matter when you buy the stock, it's going to go up, especially like an index like this, and we have the XPXL. We know that the S&P 500 is going to go up no matter what. You know why? Simply because when they have a stagnant stock in the S&P 500, it gets replaced by a growth stock, and that's what keeps the wheels churning on the S&P 500, right? We want to pay attention to what stocks are being added into the S&P 500, and right now we're just waiting on Netflix earnings. So, and we're talking about the border adjustment tax, and we see that that's going to be off the table for the retail sector, and we see retail stocks rally, and now we might be in a position to where we might see a wedge pattern forming here, and either the retail sector breaks out or we break down. So that's just looking towards into the future. I know you can't see it right now, but I'm definitely looking at a wedge pattern form here. Let me see if I can go ahead and draw that for you guys. So let me see drawings. And by the way, this is definitely how you find things like this. Let me see. All right. So if you want to extend it, we just go extend to the right. And let's back out of this so that way you guys have a better picture of that. As we see, we're getting close in this this wedge range, and we have to see what's going to break the XRT out. Is there going to be some more positive news put out, or is something else going to happen? But if we get negative news on the XRT, this stock definitely goes lower quickly, and it definitely breaks down, and it definitely goes lower than these double bottom levels right here. And if it doesn't, we might be stuck in a trading range. And that's typically how stocks move. We want to understand how stocks move. It took me, I would say about 2 to 3 years to understand how exactly these stocks move. And you want to know how I knew about the rally, simply because I followed the charts. I followed, I put my ear to the street. I started reading more, and I started to do my homework, started to look at historical facts on why stocks turn negative on this day. And I put out articles all the time on my Facebook, and I hope people read them to understand the market a little bit better. But if you read the article, you definitely would have been a buyer last week, and you'll have seen some gains today. So that's all I have for you guys. We're waiting on Netflix. This is your homework. Read up on the conference calls, understand what the CEO is saying, and that's all I have for you guys. So take care. Remember, I cannot forget, if the person that you are following on YouTube that cannot produce their returns, they cannot show their returns, be definitely more skeptical about that person. If we cannot get anybody to produce and show their actual stock returns, but they can actually talk about the gains that they're having, that's typically what we must highlight, right? Because if we have $100,000 account and we're making $500 a day, is that really moving our account? Is that really something to talk about? Are you really a good trader? But we want to make sure we're focusing on the percentage not the dollar amount. Focus on the percentage amount, not the dollar amount. So I know you guys get caught up in, up $100 a day, up $300 a day. Focus on the percentage amount, and that way you guys will get a good gauge of what if that trader is a good trader or if it's a bad trader. So if that trader has only produced, let's say the traders only produced 20% for the year, that's definitely something you want to be aware of. If that person is trying to tell you how to double and triple your account, if they can only produce 20% a year, that's definitely something you want to pay attention to. So if you're following a person that cannot produce their returns, that cannot show their returns, I would definitely be skeptical of what they're teaching you, simply because they're only just showing you how they got lucky on a stock. So like I said, we check out Snapchat. We see how quote unquote a good a stock that is, or a good buy that is. We see the stock definitely not having any sustainable moves yet, and that we have to pay attention to that. We have to pay attention to every single thing. So if you're following a person that is recommending you stocks and up on a year and they're up 20%, and they promise you that you can make 100%, you have to step back and say, hold on. Why haven't you made 100%? Why haven't you did 1,000%? Why haven't you shown your account or showing your percentage return for your account? Like I said, guys, I have my percentage return. I have nothing to hide. Instagram, Mike the Day Trader, the same as my YouTube. Check that out. I show you guys I was up over 86% working with a $100 account and turned it into about $300. So we want to pay attention to how people trade with small accounts and how they trade with big accounts, because we can trade with a big account and move money, make $1,000 a day, but is that really moving your account? Are you really seeing gains in your account, or are you just trying to scam people and just show them how much money you're quote unquote making, but really you're not making enough to say that you're a good trader? And that's simply what it comes down to. Never trust anybody that cannot show their trading returns, and that's point blank simple. Just don't trust anybody that cannot produce any returns. That's all I have for you guys. Netflix has a beat, and listen to the earnings call. That's about it. I'm definitely gonna do my research on Netflix, but take care. Have a good day.